Today's Saturday, January 20th, and before proceeding with this recording, this account is being reviewed under the small trading account, which has been designated as a securities professional, and because of that designation, this account is not receiving real-time data. Right here in the upper left corner, it says partially delayed data, and it's only specific to stock and equity options. However, other products such as futures options, and the foreign exchange market are receiving real-time data. So that said, this review is involving Denny's Corporation, ticker symbol DENN, and as of Friday's close, the stock ended the week at $10.74. So this is a chart layout at the daily time frame. So each of these candlesticks represents a day's worth of trading. The red vertical dash lines are markers for expiration Friday for monthly option contracts. And the most recent expiration was yesterday, January 19th. And the upcoming expiration for February is February 16th. And the one after that is March 15th, and so on for the rest of the year. So what I've done is, considering that price broke out of this consolidation phase early November, after this breakout, price went from a little over $8 all the way up to $11. And during this time, after hitting this high, price literally just went sideways. And for the past month and a half, I've identified $10.75 as local resistance and $10.25 as local support, as price has just been range bound in between these two support resistance levels. Now, of course, there's deviations where price either peaks above or below it, but eventually is pulled back inside these two support resistance levels. And while it might not look clear, this appears to be a triple top formation. So here's this first top, right? And then we have a second top right here. And this third top is just in the process of developing. So if this trend does continue, then over time, price will eventually fade back to the downside, creating that third top. And what I'm referring to is, if I switch over to the trade top, this is a triple top description, and of the entire paragraphs, this is the one that really stands out right here. Triple top is commonly regarded as a bearish reversal pattern. And here's this quick diagram. And this is essentially what I'm seeing on the daily time frame. So we have that strong resistance level going across, and we have a strong support level coming up across at the bottom. And then those three peaks. Again, it's not as clean as this diagram, but that's my interpretation of this. And so what I did was, because now I'm anticipating price to be fading back to the downside, I'm using another indicator or tool to help me navigate through this trade, and potential trade anyway. So what I'm using is this green candlestick here from December 14th, because this is the candlestick that broke above it. Actually, I'm going to use this candlestick right here from December 13th, because the closing price is above the resistance level of 1075. And then I'm using this as anchor point 1, right? So, and this is the indicator right here, Fibonacci time extension. So I'm using this as anchor point 1, December 13th. Anchor point 2 is this green candlestick, because it broke above and closed above $10.75. So this is from December 26th. And then the third anchor point I'm using is this candlestick from January 18th, because this candlestick, again, closed above the 1075 resistance level. So what this line is crossing is marking up is January 25th. So I'm still trying to learn and understand this time extension indicator or tool, but my interpretation of it is that price will most likely start breaking to the downside either sometime before or after January 25th. So if that does occur, based on this triple top formation, there is that probability now that price could eventually break below $10.25 support level heading into the February 16th expiration for monthly option contracts. So now that I've identified reasonable dates of interest and price levels, another area I'm looking at is this area right here. So if there's this pullback, I'm looking at this level right here, because as price was running up, if I can pin it, as price was running up in November, price literally just was getting rejected for multiple attempts to break above it. So I'm looking at this as a reasonable price to come down to if 1025 fails to hold. So that would peg it to about $9.95, $9.80-ish. So click on the trade tab. If I'm shopping for option contracts, I want to trade the options. I don't want to short the common shares. So I'm looking at March 15th expiration, right? That following expiration for option contracts, which is this date right here, the second vertical dash line. So I'm looking at that just so that I'm buying time when dealing with options. So I'm looking at March 15th, and based on the closing price, so if I'm bearish, I'm on the put side. If I'm bullish, I'm on the call side. So these option contracts are on the right side of this dashboard, puts, and I'm looking at the $10 strike price. And based on Friday's closing price, the ask price is at 35 cents. Now, each option contract is essentially holding 100 shares of the underlying security. So it's 100 shares times 35 cents, and one option contract is actually valued at $35. I think that's reasonable. So if price stays around $35, I am considering adding a position on the bearish side involving option contracts that expires March 15th. So that's the general thesis for my bearish outlook on Denny's. It's not really a stock I would like to trade, but of the stocks that hit my watch list, and I'm still reviewing many of them, so this one has a high probability of success, air quotes. Anyway, I should be paper trading this, but that's why I'm recording this, so this way I can document it and refer back to it and update my notes accordingly. So until something more significant does occur, I will pause it here and I'll pick it up if or when this trade is executed. So real quick, today's Tuesday, January 23rd, and status on the Denny's assessment is that I entered a short position via option contracts yesterday for the January 22nd trading session. We can see here that the stock ended at $10.95, and it had a very good day as the stock was up 21 cents. So as price was running to almost $11, I started taking a position on a short buys trade. So right here under the option chain, I have a position involving option contracts that will be expiring on March 15th, 52 days away from today. And down at the bottom are the details. I selected the $10 strike price, and as a buyer of option contracts and bearish, I'm on the put side. So essentially what this contract is saying is that on or before the close of March 15th's trading session, I'm anticipating Denny's will be at or below $10. Now, I picked up 10 contracts. All 10 contracts will be going worthless in 52 days. My entry price is quoted at 25 cents. And unfortunately, as the stock continued running higher, the premium dropped to 15 cents. And I'm incurring a loss of $106 since entering this trade. So real quickly, how options are valued. So my entry price is quoted at 25 cents. Each option contract is equal to holding 100 shares of the underlying security. That's what this 100 is pertaining to. So the multiplier is 100. Oops. So it's 25 cents times 100. So one option contract is $25. I picked up 10 contracts. So at risk is $250 over the next few days. Actually, over the next 52 days. So the 10 contracts is equal to holding 1,000 shares. Now the alternative was to short 1,000 shares. So using yesterday's closing price of $10.95 times 1,000 shares, the margin risk would have been almost $11,000. That's a lot of money to tie up on a short position for almost 2 months. So I thought trading the option contract was more efficient. So real quickly with the chart, if I'm anticipating a price to pull back because of that triple top formation, if price falls below 10.25 during the life of this trade, the next support level I'm looking at is $9.81 based on November activity, because as price was running up, again, there was a period of time where price was unable to break above and staying above $9.81. So I'm looking at this as that what was once acting as resistance could potentially then or now act as support if price falls below 10.25. So that's the general thesis again and current status of this trade. I am considering adding at least 5 more contracts at $15. So this way I could average down. But right now, as shown right here, so this is the MES. This is the S&P 500 futures. And right now it's pretty much going sideways. But if this starts turning red, then that would bode well for my trade. If price continues, or the S&P 500 continues on its bullish ways, then that would probably increase my probability of picking up at least 5 more contracts at $15. So for the purpose of time, I'll pause it here, let the trade work itself out. I'll do periodic updates considering there's like 2 months left in the life of this trade. So until that update, more to follow. Today is Wednesday, February 28th, and the stock market has been trading for almost 45 minutes now. But a status on the Denny's trade has the stock price currently quoted at $9.25. But in actuality, in real-time data, it's actually priced at $9.34. This is the current candlestick right here. So price has fallen below several support levels. We still have a few days remaining. There's about 2 weeks remaining before these contracts expire on March 15th. So switching over to the trade tab, the contracts have yet to be designated ITM or in the money, but the position is now up a little over $500. I'm going to go ahead and place an order to close this position out, collect the profits. I'd like to move on to a different trade. This is not moving as quickly as I was anticipating. So I'm going to go ahead and place an order to close this out. So what I'm going to do is I'm going to switch over to the option chart specific to my trade. So this is the option chart to my trade. So right by the ticker, this is involving Denny's March 15th expiration date with the $10 strike price. I'm on the put side. Here the premium is quoted at 61 cents. Again, in real time, this is quoted about 75 cents right now. So if I show trades, so right here, here's the confirmation bubble showing my purchase of the 10 contracts at 25 cents per contract. So what I'm going to do is I'm just going to close that out now. And if I open up Active Trader right here, right by the ticker, it says net position plus 10. So I'm going to go ahead and place an order to close out those 10 contracts at 80 cents, which is equal to $543 of net profit. So I'm going to place an order here. So there's my order sitting right there. And what I'm going to do is I'm going to switch over to the chart. So this is back to the chart, and here's my open order right here to close out those 10 contracts. If or when price crosses below this dollar threshold, which is approximately $9.15, that should be enough to close out the trade. Whether it gets filled today, I'm not sure, but I'm hoping to. But in the meantime, I will go ahead and pause this update, and I'll pick it up in hopefully in a few hours. At that point, it should be closed. Otherwise, I'll place a GTC order, a good till cancel order, and I'll pick it up in a few days. So, quick status check. The stock market's been closed for a little over 3 hours now, but shown here under the details, under quantity, the position is flat. I don't have those 10 contracts anymore, so it appears the 10 contracts were sold heading into the market close this afternoon. So what I'll do is I'll switch over to the option chart. So I'm back at the option chart. So right by the ticker, it says Denny's March 15th expiration, a $10 strike price on the put side. And right here, importantly, is showing 80 cents as the premium. This is exactly the order that I had submitted to close out the trade. And if I show trades, here's the confirmation bubble showing that those 10 contracts were sold at 80 cents. And right over here, there's a initial entry of the 10 contracts at 25 cents or $25. So if I open up Active Trader, net position is 0. So I am officially out of this trade. So it appears that the triple top formation has some value, but it's really hard to say with certainty because this is the first time I've actually used that as a catalyst to enter a bearish position. But I'll continue researching that on the back end. But that is it for this trade. Even though there's like 2 weeks left, I don't want to get too greedy. So I thought I'd just capitalize on that quick I wouldn't say quick, but the $535 win and moving on. I'll provide a breakdown of the Denny's trade at the end of this recording. So until the next setup, I'll see you.